Hey everyone, it's Rob Roy and welcome to the Ellie Wave Options U.S. Market Update. The stocks you see on your screen now will be the stocks that we're featuring in this recording. And as a reminder, if there's a particular stock of interest, you can go right to it using the chapters feature in the recording. All right, so let's take a look at the market. Big news today is that we closed above 460. Now, there was some economic news that came out today, which made today's move pretty interesting. We had the November jobs report that came out today, and it was actually a little bit hotter than expected, which is kind of surprising that the market moved to the upside, because this has been one of the things that's been stuck in the Fed's craw, if you will, that they've been worried about wage inflation. They wanted to see a softer jobs market. With the number being a little hotter than expected, meaning more jobs created than expected, you would have thought maybe that might have been a little wobbly for the markets. But I think if you really dig into the jobs report, it's because a big chunk of them were in healthcare. And everybody likes that. So, I mean, we're happy to have more healthcare workers. So the market seemed to overlook it. And coming back to the chart of the S&P, as I mentioned in the very beginning here, the key is we did close above that 460 level that we've been talking about for, 3 weeks now, that we were bumping up against those July highs. We've been just picking and choosing quick ins and outs on the long positions for our alert subscribers at ewotrader.com, probably getting out of a few a little bit early, but with this resistance, we needed to see a break of that 460 level before we can feel comfortable to go more to the long side or put on even more bullish positions. But you got to trade what the market gives you. So if you've been watching this before, if you're familiar with me, you know that in my view, yeah, it's nice that we did close above 460 today, but it means nothing. We need that second day. We need a follow-through day. So Monday's trade is going to be really key. Can we follow through this? Obviously, the shorts have been trying to make a stand here, and if we can put another close, higher close above 460, that's going to start to bring in some short covering, and we might have something going as far as a rally into the end of the year. I do have the Ellie Wave button on, so even with the break above resistance today, still no qualified 5-wave pattern. So we got to keep an eye on that as well. And I can't get away from just a few concerns. Maybe I'm a little conservative, but this is what we've talked about. This is what my experience has been. I don't really like this vertical move so much, and we still have all these gaps everywhere here that haven't been filled. But as I said, you got to trade what the market's giving you. But I still think that the cautious optimism, gosh, we've been talking about that since October, comes into play. So Monday is going to really be interesting. So when we take a look at the TNX, you can see that's been helpful. And this is another thing that was a bit confusing today, is we bounced up in rates. So rates moved to the upside, and yet the market still powered higher. That's not been how things have been working. It's been days when rates were up, the market was down or struggling. When the rates were down, the market was up. But so we had a hotter than expected jobs report. Market still went up. Interest rates bounced to the upside. Market still went up. Kind of odd that those two things are going on. If this is the beginning of the wave 5 here and rates do go significantly higher, I'd say we're going to have a hard time breaking above that 460 level and continuing off. But if rates just kind of go through some sort of sideways consolidation through here, that could be enough energy to allow the market to rally into the end of the year. You can see the wave 4 there right at a 50% correction. So not surprising that rates bounced up today. Just kind of surprising that the market seemed to just shrug it off. Looking at the VIX, there's back below 13 again. As we've talked about, in the past, 13 has acted as support. And every time we've come down to 13, we've had a bit of volatility come back into the market. Every one of these times, we're down here again. It doesn't mean that has to happen, but you certainly see what's happened in the past. But history also tells us the VIX can go lower. And if there was ever going to be an opportunity for the VIX to go lower, it would be moving into the holiday season, the end of the year, when volumes dry up. Volatility can dry up. I do want to put in the caveat that lower volume can also add increased volatility. If we were to start to have some sort of negative news and the market went down, the downward move can be accentuated even more with less volume. But normally, the old adage, never short a dull market. The markets tend to drift higher. The VIX could drift lower. But again, we'll see. Another thing that, you're just not quite comfortable yet with the move to the upside with the VIX being that low. So we have to keep an eye on all of those things. I did want to, before we jump into the rest of the markets, I did want to jump into Bitcoin because that's been a topic of conversation. And we talked a lot about this and have been on our Tuesday night Trade Finder. And by the way, if you haven't registered for Trade Finder, please do that. You can see the link on your screen now. We do it every Tuesday night at 9 p.m. Eastern Time. We talk about the markets, we look for trade ideas, and we have a live Q&A at the end. And so with Bitcoin moving to the upside here, this big power move up towards 44,000, you can see we're resting a little bit, which makes sense because we'd gotten a little bit overbought. That's separation from the 10-day moving average. You know what I talk about all the time. No security in any time frame gets very far away from the 10-day moving average. So if we go into even just a consolidation that occurred this way after that last vertical move, that would be impressive. And every time we talk about Bitcoin, we follow that up with Coinbase, and that's the stock that gets asked about every single time in Trade Finder on Tuesday nights, and even on Thursday nights during our insiders meeting, which is for our alert subscribers only at evotrader.com. They have an extended Q&A, and we go through all of our alert positions. But Coinbase, we've just kind of married the two. Anytime we talk about Bitcoin, talk about Coinbase, and we've been pretty doggone spot on with Coinbase. You've heard me talk about this before in the last couple of weeks. We had said that as long as Coinbase stayed above 70, then you had to stay long. And if we could get above 80, then we might have something going here. And then just like we talked about, it took off and said if Coinbase is going to run into this halving that is supposed to occur in the first quarter of next year, historically, every time that's occurred, Bitcoin has run, and it'll probably drag Coinbase with it. And that's exactly what's happened so far. I did think we might get a little more of a correction here at the end of November, maybe come down and test these highs at 110. That didn't happen. We just came down to 120. We took off again. But then if I put the 10-day moving average, one of the things that we talked about in this week's Trade Finder was that we needed to come down. We'd gotten a little bit overbought. We needed to come back down because here's where we were Tuesday night. And this is kind of a really cool feature that we have on this software program. Those of you who have been asking about it, if you are not familiar with it but curious, it's called Private Source from a company called Hub, HUBB.com. You can ask more questions about it by sending an email to support@hub.com. They've just released live versions in beta right now, and that's going to be released to the public very soon. So we're going to have all of these things that I show you, the LA wave charts, zigzags, Fibonacci levels, all that. We're going to be able to do that live. So if you're interested, reach out to them. But Tuesday night, here's where we were. So we were overbought from the 10-day moving average. We had this gap and said, I couldn't chase Coinbase right now. We need to come back down towards that 10-day moving average. And look what happened. Back to the 10-day moving average, and then took off again today. So once again, exactly what we talked about Tuesday night with Coinbase. So this has just been one of those stocks that we've been really spot on about. All right, so let's go back to a few of our other markets. The Dow, the DIA, which was the first one to break above those July highs, and it got a bit overbought with these 2 days here. So this move here on the 30th of November and then the 1st of December, got a little vertical for the Dow. You know, the DIA doesn't get that volatile. And so we got up, we had separation from the 10-day moving average, and we consolidated sideways here, allowed the 10-day moving average to catch up. A little bit of a move to the upside there today, along with the S&P. The Qs, I'm sure everybody's interested in the Qs, so we had a little bit of a bounce to the upside with rates. So did that hurt the Qs? No, it didn't. The Qs actually finished to the upside as well. So kind of an odd day today with the fact that the jobs number was pretty warm, and then we had rates going to the upside, and the market just blew it all off, and everything went to the upside. So that's a new closing high from the July highs here on the Qs, which is really interesting. So that's going to be interesting at the beginning of the week to see if that can power above this 390 level. So you got to keep an eye on that and think that if we get follow through on Monday on the Qs, it's going to be the same story as the SPY. We could move higher into the end of the year. Also, no qualified 5-wave pattern set up here either. And then the one that's really been, you could argue, the most interesting recently is the IWM. You can see that we continue to the upside here. We broke above 180, which was pretty impressive because for a while in the spring, that was a resistance level. We noted that we had this bit of an ascending triangle here. We broke above it, and we've been consolidating underneath what was longer-term resistance at 190. That goes back to the beginning of the year where we had a range from 170 to 190 on the IWM. Then it compressed to 170 to 180. Now it appears to be expanded back out. If we could somehow break above 190 on the IWM, that means that Elliott wave pattern, which is the only of the major markets that has a qualified pattern, and it's in a downside pattern, but it's over 70%. It's right at the 78.6% fib level, which is the last bastion that would keep this pattern qualified. So if we were to break above 190, that would disqualify this Elliott wave pattern. It would go away, and you could say, wow, if you are one of the ones that believe, as a lot of people do, that the small caps are a good example of a risk-on, risk-off type environment, that would certainly be risk-on, and that would give more fuel and energy to a continued rally if we could get above 190. But once again, the whole Missouri thing, show me. We got to do it. It actually has to happen. We can talk about what will happen if it does it, but it still has to go through and do it. Now, some stocks of interest, and I've selected some from the ones that y'all asked about in the last recording, and I wanted you to know that I answer as many as I can. Sometimes I just don't have the time to answer them all, but I read every single comment that y'all make. So please make sure you leave a comment underneath this recording. And just as a reminder, if you're newer or haven't viewed us in a few weeks, we are starting in 2024, starting in January. We're going to give away one of our level 3 subscriptions to one of the viewers that posts a comment under a video every single month. We did 4 back when we hit 40,000 subscribers. So please hit that like button and better yet, subscribe. And you'll be notified immediately when one of these videos is posted. But all you have to do is leave a comment under this one. You'll be registered for the January drawing. And so that gives directional trading, non-directional trading, and an income strategy based on sideways moves. So we cover all the bases and you get all of those. So each one of those is an individual subscription. We combine them into what we call level 3, which is all 3. And we're giving away one of those every single month next year for people that post a comment and go into the drawing. So again, I read your comments. So here are some of the stocks that y'all ask about. Apple moving to the upside here. Pretty impressive move above this 190 level. Again, no Elliott wave, 5-wave impulse pattern. Pretty interesting that there's so few securities with a qualified 5-wave pattern right now. But look where we are with Apple. We are right against those July highs. We kind of got there on today's close. If we could power above that level at the beginning of next week and reach 200, it's hard to imagine to me that we don't see 200 in Apple, but will that act as resistance? You know, it's one of those big round numbers. You talk about the Star Trek tractor beam effect. Those big round numbers seem to just draw the stocks to them, but then what happens? So I think it's likely Apple sees 200, and then we're going to have to see, can it break above it? If it can, then that'll certainly bring in new buying into Apple. But pretty impressive that it had a nice consolidation there from this move off of the October lows, consolidated, and then took off. And there we are nearing that 200 level, exactly at those highs from the July into the end of July. Walmart, you ask about Walmart. This is one, it's hard to understand with what's going on with the retailers. Lulu reported earnings, and they had great numbers. They issued great guidance, but then the commentary in the conference call was cautious. So it's like, how do you do that? How do you issue positive guidance, but then talk it down in the commentary? That didn't make any sense to me. But anyway, Lulu had a big up day today, but Walmart did the same thing. They had great numbers, and they talked about hey, we're a little concerned with where the consumer is going to be moving into the beginning of next year. And it tanked on that commentary, even though they had good numbers. Their guidance wasn't glowing, but it wasn't bad. But they were concerned. They posted comments. They were concerned about the consumer spending in the holiday season, and Walmart's just gone down ever since that occurred. So totally different than Lulu. So is it that you could make this argument in the retail space that we're spending on the higher end, but maybe not on the discount end? So at this point in time, you would think that Apple would be heading down to the previous 4, but that Wave 5 extended more than 100%. And when the Wave 5 extends more than 100%, you only look for a 61.8% retracement, not all the way back to the previous 4. And we passed that. You can see briefly there, we were at the 78.6% level. So notice we came down to 61.8, bounced there, came out and just kind of hung around it, which also happened to be support from June and July. And then yesterday and today, we've broken below that, which does lead you to believe, because there's really not much in the way. Little bit of support here at 150 going back from April and May, but not a whole lot. So it seems like we could see 145. If 150 doesn't hold, it won't take long to get to 145. We are just a little bit oversold, as you can see by the 10-day moving average, which is still right there at that 61.8% retracement or corrective level. So that boom, boom days have gotten us a little bit oversold. So maybe we get a quick bounce off of that level at the beginning of the week. But can 150 hold, or do we have to see 145 on Walmart? The news that was released is that people are borrowing from their 401ks, 403bs, the retirement plans at a record rate. So the consumer is still spending, but we're borrowing from our retirement plans to do it. Is that a positive thing? It feels like at some point in time, all this stuff has to come to roost. The inverted yield curve in the bond market, et cetera. But when it gets here, we'll talk about it. For now, we have to go with what the market is giving us, and that's so far a slight bias to the upside. PayPal was one you asked about. That's a good one to take a look at this time of the year, right? As the holiday season comes around, people use PayPal often. Notice what we have here. This is really interesting to me. So if you're looking for something that's a pretty well set up trade, look at the size of that ascending triangle here on PayPal. Now, I mean, something is going to happen pretty soon on PayPal. Now, I want to remind you, because there's a lot of information out there, a lot of education that says, hey, an ascending triangle breaks up, a descending breaks down, symmetrical triangle can break either direction. That's bogus. The data doesn't hold that up. I think I know as much about triangles as most people do, and I can tell you, when you have a triangle, it can break either direction. Again, no qualified 5-wave pattern to skew our view, just a really clean looking ascending triangle. So we're going to have about a 10-point move out of PayPal. You go from the widest part of the mouth of the wedge, so that would be the bottom here around 50, and then the resistance level at 60, so it's 10 points. You're going to look for about a 10-point breakout in PayPal in the not too distant future. And once again, it can be up or down, even though it's an ascending triangle. It may go up, but it ain't going to break up because it's an ascending triangle. Could just as easily break to the downside. So we'll see. And then one of you made a comment, because we looked at this on Tuesday night's Trade Finder as well, with this big move to the upside on UiPath. And it was like, how come you didn't tell me about that move? Well, I wish I would have seen that as well. But what this is telling you is this was an AI-based move off of earnings, and the money is looking for rotation on anything AI-based. So you can see there was the earnings report, the little E right there, and the big gap up, and that's why, because of the commentary that they had on AI. So market is looking for stocks. NVIDIA's had a big run, Microsoft, some of the others. So there's money rotation going to try to find stocks that are in the AI space in a big way, but maybe haven't had the run like NVIDIA and some of the other stocks have. And this is one of those, and that's why it broke to the upside. Pretty interesting move today back to the upside. This looks, very similar to what I talked about with Coinbase. We got overbought on that big move, came back down to the 10-day moving average, and sprinted back to the upside today. Almost an identical chart to Coinbase, so pretty interesting there. Alibaba, still in the retail space, but trending lower here as well. The economic news out of China has not been good. The recovery is not nearly as strong as people thought it was going to be. We had some support there around 77 or so on Alibaba, and we broke below it, and we're in a wave 3 to the downside here. And you take a look at the 10-day moving average, you can see not really that much oversold here, just kind of trending down from that 10-day moving average. Now, at some point in time, you would think we're going to at least get a bounce up here to this level. What was support becomes resistance. So you would think at some point we'll come up and test that level. But if we can't get above that level, I don't think you can be long Alibaba. Even a bounce up, if you were really speculative and had some extra money laying around, discretionary money, you shouldn't trade options with money that you can't afford to lose. We all know that. But if you're looking for something really speculative, maybe we get a bounce up here and test that level. But if you're looking for, a position, an actual trade, I would want to see a break back above that before we start looking for anything long here on Alibaba. We do have a gap here that hasn't been filled yet, which happens to coincide exactly where this previous 4 is, which is a support area as well. So at some point we might see 85 on Alibaba, but it's in a wave 3 to the downside, and so perhaps a bounce up here, but if we can get above that level, maybe a move to 85. Gold, we got to keep an eye on gold. And gosh, this is a perfect example of another one of the rules that you need follow through. Talked about that in the very beginning with the SPY. We had this break here on the GLD above 190. We actually had an alert for our alert subscribers at Evo Trader on GLD, and it took it off on that day because of that vertical nature of that spike. And it turned out to be the right move. I've said that some of them we may have taken off a bit quick, that have run further after we've taken them off. But these nice quick gains that you can see in our 2-minute trade reviews have been fun. It's been a great couple of weeks. But with that move, we just got a little vertical there. Felt like maybe we're not going to get follow through. And that one was spot on because there we go, right back down, no follow through day. And so now we have to start over again here. See if we can hold this level, which we did on the low today at 185. See if we can hold there and try to make another run at breaking above 190. So right now on GLD, just kind of waiting and seeing. Would look for an opportunity to get back in. Probably wouldn't do it on a bounce off 185 at this point. We got that nice move up. Would want to wait and see a full break above 190 on the GLD to turn and move back to the upside there. And then last but not least, to finish with the INDA, man, just so impressive. This move here on the INDA. Notice the chart has relabeled from a wave 5 to wave 3, which means likely we have more to go. We got a little bit extended here, a little overbought from the 10-day moving average with this vertical move. So we're in consolidation there. But you just really have to be impressed with the INDA has done everything the way you would expect charts to act. This nice 45-degree angle move that we had back here, a little bit of a correction, went up, made a wave 5 high, came down in a beautiful zigzag pattern right there to the corrective move following that. So there's that, look at that, just a perfect 100% correction on that zigzag. Back up, consolidate under the recent highs, and then take off, and it took off and relabeled. So that's as classic as it gets from LA Wave, Fibonacci, etc. And so look for more highs in the INDA, maybe not in the near future because it's going to have to maybe consolidate and do some back and filling off that vertical move, but it seems like that wants to go higher. Thanks for your attention as always. Have a great weekend. Look forward to talking again soon. Take care, everybody. To join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.